G'day guys and welcome back to the Aussie Dividend Machine. In this episode we're talking all about gold. We'll look at what gold represents as an investment, why people hold gold in their portfolio, and why purchasing gold might be the right kind of investment for you. In this video I wanted to cover three main topics. They are looking at why people choose gold as an investment, the different ways you can buy into gold, and then finally we'll look at whether or not purchasing gold is a good or bad idea in the current climate, and we'll hear from some of the best investors in the world on this topic. Gold is a good alternative to cash or bonds. It provides investors with insurance in times of crisis, whether that be war, natural disaster, or some other event where access to cash might be quite difficult. And finally, gold maintains its long-term value. Cash has periods where it goes up and down, and there can be a great risk of cash losing its value in a situation where there's hyperinflation. That is, the value of the currency loses its worth. In this kind of scenario, having access to gold in your portfolio is really great. That's because even during hyperinflation, the value of gold maintains its worth. We can have a look at some of these graphs up on the screen showing the long-term value of gold and how it's compared to the stock market. We can see recently the price of equities has gotten really out of touch with the price of gold. What does this mean? Well, it could be a red flag. It could be a sign that currency is getting out of touch with gold, which it used to be backed by. However, for the purposes of this video, we're not here to speculate on why that might be. Let's move on to the different ways you can get exposure to gold in your portfolio. So if you've decided to buy into gold, it's probably because you're a big fan of its defensive qualities. So as an investor, you've got an option of buying the commodity outright, or you might buy into a gold mining company. If your main concern is security, which would make sense if you're investing in gold, it makes a lot of sense to buy the commodity and not into a company that mines gold. Whilst correlated, the prices of gold and gold mining companies do not always rise and fall in tandem. The stock price of gold miners can, in some circumstances, outperform the price of gold, and this can make investing in mining companies very attractive. However, by putting your money into a company as opposed to a commodity, you open yourself up to risk of poor management or operating issues. If you're looking at gold as an investment, you're looking for security. You're looking at reducing those long-term risks that might come about by owning a company. A mining company cannot guarantee the same security and stability as buying the commodity outright. And for this reason, if you are looking into gold, I'd recommend steering away from gold mining companies. So you've decided on gold and you've decided to go for the commodity. What are your options from here? Well, if you like, you can go down the street and go to someone who sells gold and buy physical gold bullion. The disadvantages of this are that you actually have to keep the gold somewhere safe. There's a physical transaction there, and it can be quite a process. For this reason, the sensible choice for buying gold is in a gold ETF. This is a fund that holds real physical gold but can be purchased on the stock market. As gold ETFs are traded on the stock market, you can easily buy and sell whenever you feel like it. So for me, if I'm investing in gold, I think a gold ETF is the way to go. Okay, so let's look at some reasons of why you might not want to buy gold. Gold is a non-productive asset. If you own gold, whether it's physical or in an ETF, it just sits there. It doesn't do any work, it doesn't pay a dividend, and the price is really pretty stable. In general, a decent productive asset over the long term will outperform a non-productive asset like gold. This is backed up by Warren Buffett. You can see what he says about gold in this video.
If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time.
As a point of comparison, you can look at a gold mining company like Newcrest Mining. They're a massive gold mining company in Australia who's got a pretty good track record of performance. The key part to note here is that Australia has huge gold reserves, which are proven for many years to come. In this scenario, Newcrest could be quite a stable investment. Perhaps not as stable as gold as a commodity. You can expect Newcrest Mining to continue to expand its operations, pay out a consistent dividend, and in the long term, perhaps outperform gold as a commodity. With such massive proven reserves, where is the risk with Newcrest mining? Well, going back to what we said earlier in the video, if some bad management comes into play or there's some operational issues, this is where Newcrest could fall over. However, I think you could argue with their long track record of performance, this is unlikely. I'd say if you're looking at gold not as a defensive asset, but more of something to try and generate an income, you definitely want to look at something like Newcrest mining instead. However, another one of the world's best investors, like Warren Buffett, is Ray Dalio. Ray is red hot on gold. He believes that owning gold at the moment makes a lot of sense. This is mainly due to the amount of money that is being printed at the moment by governments all over the world. This has only been recently amplified by the coronavirus, with governments spending huge amounts of money on stimulus packages for the economy. This money largely is being generated by printing more money. The effect this has on the value of the currency is called inflation. Whilst at low levels, inflation is expected, if it gets out of hand, which it definitely can, it can lead to something called hyperinflation. This is something we've seen happen before in history, and essentially the value of the currency is absolutely eroded. In this case, those that are holding on to gold still maintain some value in their portfolio. You can see in this next video, Ray is outlining the upcoming risks of hyperinflation.
Is I think that you have to have a certain amount of gold in your portfolio, right, or you have to have something that's hard. There are three monetary systems that happen. The first is, in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, right, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. Right. And we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want, and you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
So I think for these reasons, personally in my portfolio, I'll start a small position in gold going forward. I think we're entering a time of real economic instability, and I think that holding a small stake of gold in your portfolio definitely won't have a major impact on your long-term returns if we don't see a rising inflation market. However, if we do see the rise in inflation, provided you have a small stake in gold, you will protect some of your wealth. Well, that's my take on gold. I'd love to hear your opinion. Make sure to leave a comment in the section below. If you've got any thoughts or questions, feel free to leave them down there. Well, that's all for this one. Thanks for watching. I've really enjoyed making this video as always. Stay safe out there, and I'll see you guys in the next one. Cheers.